Maximus Analysis here for October 25th, 2016, and wanted to go over Apple exclusively today. Apple had earnings, and you can see that it is down. Again, it is down pretty much. We closed at 117. They're at about 115, basically 114.96, 115. So I'm gonna put a little mark right there, just to show us where we are. And then kind of look at some higher time frames to see what that means in regards to where the trend is and where we live in the trend. So let's back out to like a 130 minute. And again, you know me, I like to have a lot of information at hand. And you can see that again, until they break below this 113.77, I wouldn't be too afraid, but they do look a little bit overbought on some other time frames. And again, it's only Monday, Tuesday, what is it today? Yeah, it's Tuesday, so going into Wednesday, so we really have to see how they're going to close. Again, if you trade or day trade gaps and things like that, again, you could probably use these levels to help you as well. But let's look at the weekly time frame to kind of scale out and see where we're going to open and what this candle is going to look like. So on the weekly time frame, you see that this candle is going to come here. It's going to be fully red, coming basically almost 2 weeks back. The 2 week back low is 114.72. Again, it's probably just a little sneeze from where it is right now. That will give you a red bar, almost like an engulfing bar, but nothing crazy. Again, I would look to see how this pullback gets into these previous highs. Again, if it starts breaking really bad, that 112 area, I would look to see where we are in regards to how, if we get here, layer above these highs, maybe you could continue it along. Again, I would want to really see how this week plays out, because we have again, we had our 1, 2, 3, 4, 5, 6, 7, 8 Fibonacci. We're told a little bit. 1, 2, 3, 4, 5, 6, 7. This would be the 8th bar. Again, I usually like pullbacks with 1 to 3 3 to 5 bars. Again, I usually don't do 1 bar pullbacks because I usually get hosed on 1 bar pullbacks. And that's just, most of the time, it's just people just chasing. Again, you do have your inside bar that does give you some payment depending on how this structure is formed. But you could see here, again, I have a lot on this chart. Let me kind of clean up a few things that are not relevant anymore. And you see here that we have a couple things that we are going to be looking at. Again, the last short I took for this was this one right here. It was pretty easy based on looking to the left. You see that this has bounced many times. Let's see where we are in regards to the Fibonacci retracement of the entire range. Now we are a little bit above that golden ratio of 6.18. So a break below that means, again, if it gets back and does not hold this 112.12 area, which is the midpoint of the big swing. Again, I want to make sure you guys are using proper information, not just a bunch of candles, and just saying just the moving averages. Let's see how they close, because again, look at this. This is the area that they're going to open tomorrow if everything stays relatively the same. Now, that will give you an engulfing-ish type of bar, but I would wait. Again, it's Wednesday. You can wait Thursday or Friday before putting your position on. And if you're looking to go short, I would put my stop above this 119.17. Now, they did go, during the whipsaw of the earnings, they did go up to 121.91, which is another level, which is, you can see on the 65 minute, they got right to it and then rolled back. So again, you can see to the left that this was a level that they didn't get to before. So that would be something, again, initiating a position and really, really looking far. Again, let's go to 240 just to kind of give ourselves some room. You can see that they've been trending fairly upward. And again, this is just the 200-day moving average. Why is it not giving me more information? Interesting. Either way, let's look at the daily now. And you could see, again, that they are a little bit above this golden ratio right here, Fibonacci coming from this high to this low. Again, a lot of gaps. So you have gap down, gap up. You know, people say gaps have to be filled. I don't, you know, whatever. It depends on your time frame because there's no gaps on this weekly time frame. But I would at least wait till the end of the week to put on a position, because you then would manage risk to say, okay, if we close below here, okay, and then we close below here, which is actually the midpoint of this entire range, which was, again, before this happened, this flush down, this came at an earnings point as well. It wasn't the midpoint, but again, you could continue to see that. Again, we'll watch and see how they close, because you have clear, you know, resistance. So again, looking at going to the left, again, let's say this is the point that if you wanted to put your stop above here, but again, your target, you'd have to look at the risk reward and see where it goes from here. But again, you have two levels that you'll be able to leverage off of. You have the 119.17 and the 121.91. So again, we'll continue to watch for that tomorrow. And again, don't get lost in the weeds. Make sure you're looking at the overall picture, because you do have a couple of big earnings as well today. This week, you have Google, and not sure who else we got today, but I know Google this week. So continue to watch that, and just want to give you an individual name, especially it being earnings, and you can kind of see from there. So again, you can write these down. Let me actually take this one off, because it's probably the least relevant of all of them. These are levels that you can leverage off of to see, again, where they go. And they broke above it, but now they're pretty much really tired and gap down. But again, don't be the first one out the fox. So again, if you play gaps on an intraday basis, completely different story. But if you're looking to see, all right, I'm looking to short and hold this for 3 to 5 to 8 weeks to the downside, wait for this. At least wait. You can wait a day or two. All right, take care.